Hey everybody, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to discuss my portfolio for the month of November 2024. I made $8,359 in this specific month, and I'm going to break down how I did that through either YieldMax, round hill funds, and some of my profit hit and runs, which is usually normal options trading and things like that. But if you guys are new to the channel, the purpose of this channel is to borrow money to make money, right? So what I specifically did is I borrowed an $83,000 HELOC loan against a rental property I own, took that money, threw it into Robinhood, borrowed against it, and then that's how this project came to be. So let's get started. The first thing I usually like to show on my portfolio or this channel, my account value, right? So last time I made a video, the account value is about $115,000. However, NVIDIA went down a little bit, so I lost about $3,000 in value, but that's not a big deal. Stocks fluctuate up and down. There's no reason to panic just yet. However, I do have a concern that's coming up, and I will discuss it in a second here. Right, but account is currently at $112,357.38. So when I first started this project, it only was at $102,000. So I somehow figured out to make $10,000 of gain in this account. And I also pulled out about $29,000, almost $30,000, took it out of this account to then pay off some of my HELOC loan back. Not that I need to pay it off sooner. It's just something for my peace of mind. I just want to get that loan out of the way so that once I finally have that loan paid off, I don't have to worry about an $800 payment. And then everything I make after that, I can reinvest into this specific account and then make more money later. So is it the smartest thing to do? Not necessarily, but when I started this project, that was the intent. And then I'm going to stick to it because I technically could just pay the $800 a month plus the Robinhood margin. However, I just think for my peace of mind and what I plan on doing in the next couple of years, I definitely want to have a little less debt because I do plan on buying another house and things like that. So I'm saving up for it. But let's continue about the specific stocks I own. So right now, NVIDIA is at $25.34 a share. My current cost basis, let's click in here, is about $25.35. So the one concern I have is NVIDIA is having a distribution payment this week, right? Because it's in the B funds for YieldMax distribution. And my one concern is that if they have like another $1.10, $2 type of distribution, this NAV is going to drop to about $24.35, which I'm not necessarily a fan of. So I'm debating the idea of maybe selling out before this distribution. So when it does drop to that $24 marker, then I'll just buy back in at that point. However, I do lose that potential distribution yield. So that's something I'm thinking about. I haven't really made up my mind as of Sunday today of when it's happening, but I have until I think the 4th is a declaration day. And then the 5th, December 5th is the exit day. And the 6th is the distribution day. So we'll, more to follow on that. And I just need to sleep on it because, and then we'll go from there, you know? So that's kind of NVIDIA. Let's go back here. And then everything else in my portfolio right now, like SPY, that's I consider a core foundational holding where every time I get a distribution, I'll take about $500 to $600 and then send it to SPY, just kind of be like to kind of catch the growth of the S&P 500 at the same time of like getting the distribution yields from YieldMax or Roundhill. And there's actually another fund that I'm interested in that I've seen some YouTubers use. So we'll dive into that in a little second here. But yeah, as far as the rest of this project, SPY have about almost 10 shares, JEPI, JEPQ, xdte. That's kind of more my like trench line, my silo for investing, where they're not going to produce as much distribution as a YieldMax product. However, the NAV is pretty stable and it returns a pretty good distribution yield. So that's kind of why I have those in my portfolio. Not a ton of money invested here because I rather get the yield up front and then distribute it in the side later. So yeah, that's kind of what the strategy is with that. And specifically for YieldMax, I don't know if whoever's new to this channel, but for YieldMax, these are momentum plays only, right? So if there's a stock that is hot, like NVIDIA right now is that ember is kind of dying down, but stock like msty and it's kind of shooting up, you buy in, go up to shoot up, and then once it's starting to take that other turn down, then you should probably sell out and find something else, or maybe hold cash for a little bit. So that's kind of where I'm at right now with NVIDIA. I think that Enver's slowly dying out. I definitely think there's still a lot of room for appreciation. If NVIDIA can stay NAV neutral, like if it can stay kind of near my $25 like price range and like maybe drop down to 24 and then go back up and kind of rebound back and forth, I'm cool with keeping it. But if it hits like 2 distribution payments and then it's like a second one is there not recovering, I'm probably going to sell out. But we'll see what I do with NVIDIA. I don't know. I'm just not set on that right now. But let's talk about. All right, so I kind of talked about what I plan on doing with NVIDIA because the Group B funds for YieldMax are going to be distributed this month or this week. So I don't really have anything more to say on that. Yeah, so NVIDIA is kind of like on that little bit of a decline right now. We might see it bounce back up, or we might see it go down to this 132 number, maybe this 118 number. So, it's hard to say exactly what's going to happen. Maybe even this $104 number. Hard to say what's exactly going to happen. But right now, I'm very bullish on NVIDIA itself because the Blackwell chips are coming out. Tons of the big tech companies, cloud service providers are scooping them up. AI, I think, is just starting. And right now, they need those chips so that they can meet that demand. So I'm very bullish on NVIDIA right now. I don't want to sell my NVIDIA, but if I need to protect my capital, I will do it. I'm not afraid to do it. And that's the thing with investing is you can't be emotionally tied to a specific fund. The second you are emotionally attached, maybe you got to hang up the hat and just throw your money into like an ETF and things like that. Just ride it out, But if you're investing in these high growth income ETFs, the second it's not performing the way you want to, you need to pull the money out and then reinvest it somewhere that is performing the way you want to. Because why would you sit on a sinking ship and watch it go under, right? But that's kind of my 2 cents for NVIDIA. So I talked about my SPY portfolio. Well, let's talk about xdte. So I did a trade for xdte where I bought in somewhere around this like 52, like 33 marker. And then the stock market appreciated up until about 53, I think, yeah, 31. But I think I sold out at 53.18. So I initially was going to hold on to xdte. I put about $17,000 into it about a week ago. I got like $100 distribution. I was like, oh, great, this is sick. But then I saw the market shoot up, like specifically the S&P 500, because xdte follows the S&P 500. So I saw it shoot up and I'm like, man, I definitely think there's going to be some sort of rebound. This SPY is trading about $600 a share. And I thought that was a little bit too high. So once they kind of hit that, like almost $1, I think it was about 81 cents appreciation, I was like, man, I'm going to sell out. I'm going to lock in about a $260 profit, because that one distribution, putting in $17,000 to only get $100 is kind of like not the greatest, but it's a free $100 I didn't have to work for, But what I plan on doing now with that $17,000 is I'm going to keep it in cash. And then I'm hoping that it drops back down and back into like the 52.30 mark, maybe even lower, but not necessarily waiting to rush into things. Just kind of my thought process there. But yeah, that's kind of the thing I did with xdte. So close that out. But now let's talk about Kurv ETFs. So I've been watching a bunch of YouTube videos and I saw this new, not necessarily new, it's been around since the same amount of time as YieldMax, but I definitely think Kurv is doing exactly what I thought YieldMax was going to do, right? So Kurv, we'll go to their site. Yeah, so I thought Kurv was going to be what YieldMax isn't. Kurv, they like to protect the asset value of the specific stocks, but then also as a bonus, as some would like to say, pay you a distribution for owning that specific ETF, right? So right now, Kurv has a couple of ETFs. They have KQQQ, which is a part of the technology funds. We can talk about what's in there in a second here, but then they have amzp, Aptly, Goop, msfy, so it's like Microsoft, nflp, Netflix, so Goop is kind of like Google, and then tsly. So I just want to show you guys a side-by-side comparison of what these specific Kurv funds have done versus what YieldMax have done. And then just from looking at those two values, we're going to compare and contrast and be like, hey, which one looks like a better investment? And then it's pretty straightforward to see which one is or is not. So let's take a look. right, so the first fund I want to take a look at is the KQQQ, right? And so for this is just like a grouping of ETFs. I think like Oracle's in there, Apple. I guess we can click on the QQQ. Let's see what their holdings are. Yeah, so they have Amazon in there, Google, Apple, Facebook, NVIDIA, Avgo, Tesla, Oracle, and they even have their own tslp in there. So this, like, I don't know, KQQQ ETF, I definitely like all the funds that are in here. And so this is kind of where my headspace is at, is if NVIDIA has like a really rough time recovering its NAV, I wouldn't necessarily mind throwing my money into this Kurv fund, right? Right now, it's only been out since I think July, but since its inception, it's already up 5%. Yep, it's about, 5%. But then the distribution for Kurv has been pretty, it's been pretty safe. I'll put it that way, right? Nothing to write home about. But the fund just started. Yeah, the fund just started, slowly trying to get the distributions dialed in. So right now, this doesn't look too great, right? Especially if you want like a high distribution like what I want. But if it's a safe investment where you don't lose your money, this might be a good, good idea, right? And the stock is only trading at, $26 a share, which is quite affordable. So you have, instead of spending like, $50 or $60 for a JPY, you can get the same, almost similar distribution yield from just investing into this and have more shares. That might be something to look into, right? KQQ is just something that's on my radar, not necessarily something I'm really interested in investing in right now. The ones I really am curious to see are amzp and tslp, right? So initially I was invested into the YieldMax amzy, right? With the same idea, like, okay, there was no necessarily NAV deterioration, or it wasn't as much as like a tsly or any of the other YieldMax ETFs. So I kind of stuck with it, but then eventually one earnings call ruined Amazon's or AMZ's share price, and it shot down. And then to this day, Amazon's at like record highs at $210 a share. And amzy there's no way to recover its NAV. However, if you look at amzp, right? Let's go through a year. It's been out for about a year. Let's go. Let's go just look at the past year. The past year, this fund has grew 16%. That's awesome, right? And on top of that, you're going to get a specific yield from them as well. So let's run it over to their distributions. Yeah, so like you get the appreciation of the fund, and then you're looking at these are all like 30 cents, 37, 64. That's massive. This is exactly what we're looking for. We want the NAV price to go up, and we get a somewhat consistent distribution. So I'm telling you right now that this distribution of like 35 cents, 37 cents, is exactly what JPY does. And that thing goes for $60 a share, right? So you can buy 2 of these and make the same amount of money as investing in the JPY. This is actually a really good play, right? This is something I'm highly considering doing, right? Because of, if you get this is 65 cents, that's literally what amzy just made for YieldMax, but the NAV deteriorated. So let's compare and contrast, right? So let's look at, this is amzp up, 16%, plus you're making all those distributions. Now let's take a look at amzy and compare it and see which one's better. Yeah, so now let's look at amzy, guys. It's down 7%. And the distributions weren't that great anyways. They were kind of very mediocre. So why would you invest in a fund that the price is going down over the year when Amazon itself the stock price has been skyrocketing? If you're asking me, amzp is a far better investment, right? So once I see there's a little downturn in the market, maybe if it goes below like $30 a share, I might jump into it with like $10,000, maybe even $20,000 just to kind of see what happens. But this is definitely something I'm highly interested in deploying my capital into. I have about $50,000. Let's look at here. I have about $46,000 of margin available for me to invest, and that's something I'm highly looking into. But usually I only like to I think keep about $25,000 margin available for like a quick play. So I really only spend about 21,000 into amzp. So it's definitely something I'm highly looking forward to adding to my specific portfolio. But now let's look at tslp. So I'm a big believer in Tesla. It's definitely a long-term play, so the short-term isn't necessarily as great. The way Tesla moves itself is parabolic movements. It's either parabolic up or parabolic down, right? So right now I think tslp, I think there's going to be a downward trend because I think Tesla hit some all-time highs. So I'm going to wait to invest into tslp, but this is definitely something that's also on my radar, because if you compare this tslp to tsly, you're going to see that tslp is way better, right? So if you go down the distributions, yeah, these are some solid distributions, about 60 cents, 30 cents, 40, 50s, you know, almost 60 cents here, right? So if you can lock in like a solid distribution like that, let's see, solid distribution, the share price is only $27. This might not be everybody, but if you bought when initially came out, you're up 10% compared to tsly. We're going to take a look here. Tsly last year has been absolutely brutalized. It's down 37%. So this just might be a cry to anybody that's invested into YieldMax. I am a firm believer that YieldMax is momentum only. For anybody that has like their money in YMax, YMag, or any of the YieldMax funds and you want to hold it long term, I say this with a sigh because it's probably going to hurt, but I think you might need to sell out of those funds and then go into Kurv funds. They're more stable. This last year performance has been by far better than 90% of the YieldMax. The only two YieldMax funds that I'm actually interested in ever buying is like NVIDIA or msty. There might be some that are performing good on a day or a couple of months, but those are the two right now that I think that are hot. And everything else, like if YMax, YMag, tsly, PayPal, whatever, Netflixy, like just go over to Kurv. You know, it just seems that they're doing a better job maintaining the NAV and you're getting a distribution, right? So that's kind of my 2 cents. I wanted to call out Kurv because when I first started investing into YieldMax, this is what I wanted them to do. I can keep my investment safe and get a distribution. It's exactly what I was looking for. But Kurv did it and YieldMax didn't. YieldMax, they maximize giving you a distribution, versus Kurv in their prospectus says they're going to try to protect the capital as much as possible. And they're going to pay you a distribution or a bonus, as they like to say, afterwards when they're doing good. So I definitely respect that prospectus and that methodology a whole lot better. So you will definitely see me be investing in these funds sometime soon. If there's a downturn, I'll definitely do it. But even right now, I think that the way they're performing or keeping these, or how they're operating this ETF and the options calls and what they're doing, making them like 5 to 15% out of the money so they can always get that 5 to 15% gain. I definitely like their methodology a whole lot better than whatever YieldMax is doing. And the fact that I heard in a YieldMax interview where the only way to not lose your money for a YieldMax fund is to put it all back in, that was eye-opening for me. But yeah, that's kind of my 2 cents that I wanted to share with you guys early on. Now we're going to go through the different Excel spreadsheets and talk about where I made the money, how I made it, and things like that. So let's get started over there. All right, so I never really know where to throw myself for the specific view of this Excel spreadsheet, right? But here we are. So when I first just kind of going over the starting variables for this project, started back in June of 2024. And so this is where we are right now. So initially, the project, we started with about $83,104 borrowed. Currently, when I said I paid back some of the HELOC loan, is about $29,560 to be exact. So I almost paid back, $30,000. The monthly payment on that $80,000 HELOC loan is about $796.82 a month. That's the minimum I need to pay it, but I usually like to do, $4,000 to $5,000 every single month, right? Robinhood Gold costs me about $5 a month. And then if I max out $75,000 borrowed, it's only $400, which is funny because it's way less than borrowing money from a lender which makes no sense to me. But yeah, thanks Robinhood for being so kind, letting me borrow money for pennies pretty much. All right, so let's go here. Taxes, nobody wants to talk about taxes, but they're super important, so we really need to bring it up. I'm in a high tax bracket, so I usually just do an estimate across the board, 35%. If you're actually interested in understanding how return of capital works, I made a video on it. Very simple, straight and to the point. But the way you look at it, just quick summaries, you look at a form on the YieldMax or Roundhill called a 19 Alpha 1, and it tells you how much was return on capital and how much you're gonna have to pay on the net gain. So kind of nerd stuff, but if you're actually curious, watch that video and then you can figure out how much you need to pay for taxes. Let's see. So initially when this project started, I was invested into tsly, but you know, the realization of that NAV deterioration, the premium payments were freaking amazing. I'm going to be 100% honest. Every time that paycheck came in and I had, you know, like 1,000 shares, it was like $1,000. I was like, oh man, this is sick. Right. But it's not so sick when you start losing your money and your investment. So that's not a good thing. Right. So that is currently at $0 and I don't really have it invested in anything differently. That's why I'm curious for tslp to be that replacement. Or I can just put all that money towards amzp. But yeah, currently right now for YieldMax, I am highly invested into NVIDIA. So initially when I started the project, I only had 4,681 shares. Currently I'm at 6,077 shares. I took some of the money from tsly and or amzy and put that money towards NVIDIA just so that I can maintain a relatively high premium. But yeah, and then for amzy, I had 1,101 shares, but then sold out because I just wasn't a fan. Like I still made $3,000 after selling it, even with the price going down, but that's not what I'm looking for. I'd rather have the price appreciate. And then as the price appreciates, I also get distributions. That's really what I'm going for. So I sold out of this. Maybe we'll buy some amzp, but definitely I think stock market's kind of high. I think it'll kind of go down a little bit. And then on that little rebound, I'll try to jump in with maybe $10,000, $20,000. We'll see exactly. All right, so core foundational holdings. So throughout this project, I like to set some money aside to put into SPY, kind of like I mentioned earlier when we were looking at Robinhood, is just to kind of capture the growth of the S&P 500 and just capture the growth because these high income ETFs, their growth isn't as good as just putting your money into SPY. So I wanted to capture that slowly while I get some of the premium. I want to invest it into things that the premium doesn't, it grows a little bit, you know? Yeah. So the account, when I first started, looked at about 102,000. I had about $20,000 of my own money invested. And then, so today, as you saw from my Robinhood, it's currently at $112,419. I haven't updated this 12 months remaining, but I think it's still accurate because the NVIDIA distribution was kind of low. And yeah, it's either 11 months or 12 months. So we'll see how that plays out. I like to track the metrics through charts because I'm a big visual guy. I like to see numbers go up and down, but basically, if we look at our first graph here, this tracks the individual performance of the ETFs I was invested in. So that was NVIDIA, tsly, amzy. I think I'm going to have to update this if I do end up buying amzp or tslp to incorporate those specific funds in there as well. But currently, the only distribution I had from YieldMax that was $4,976.43 was NVIDIA. Definitely declining as the premium that YieldMax is paying out is a lot less than when I first started this project. Usually, when I first started this project, the first two premiums were absolutely amazing. They were like $2.50 a share or like $2. And that definitely propelled this project into an amazing green territory. But since then, the distributions for YieldMax themselves and for NVIDIA have gone down quite a bit. So that's why it's at, $4,976. And so for the monthly premium, this is just the total money I got for YieldMax. So for the month of November, it was just my NVIDIA payment, right? But let's scroll down to my other charts here. Maybe move myself out of here. Okay, so the core holding values, we'd already talked about it. That's just my SPY investment. That's just my SPY investment. And then just how much money I put towards that SPY investment is the growth of core holdings. So let's scroll down a little bit. So my net account value, this is something that I absolutely love to track. That's basically if I sold everything in my account today, how much net would I have left over? So as you can see, when I first started the project, I had my money that I initially invested about $24,000, $20,000. And then if I sold out everything today, I would be up to $58,000, right? So that's pretty good for me not putting my own money in, just throwing that out there, right? So I think that's pretty cool. And then let's look at the total taxes. As I said, I'm in a higher tax bracket, but whatever tax bracket you're in, you can calculate that for yourselves. From all the premiums I've made so far, I set aside $18,000. But if you looked at my return of capital video, it's closer to $10,000. But I'm still going to set aside this $18,000 because you never know what Uncle Sam's going to try to pull out of your pocket this time. So it's always good to have more saved up and then not be surprised versus less. And then you're trying to struggle to find more money to then pay your taxes, which is never a good feeling, right? So the cost of debt. So throughout this project, it cost me about $5,881.64 to borrow for the 6 months to borrow about $75,000 of Robinhood margin plus $83,000 of lender money, right? So it only cost me about almost $6,000. But if you look at this net after debt, this is how much money I made after this debt payment. That's how much net I made. So I made about $45,914.42. So let me explain it this way, right? So if I borrowed, $0 of debt, I wouldn't have that $45,000. I would have no extra money. So people are very scared of taking on debt because they don't want like the tax man or like the lenders or like people to hunt you down if you like miss your payments. But at the end of the day, I'd rather risk having a like loan number saying you owe this much money, but then be positive, $45,000 versus taking out no debt and being safer, right? But I'm also younger, right? And if you're in a different situation, maybe it makes sense. Maybe you don't want to take on $80,000 of debt because whatever retirement you saved up or how much money you saved up, it might be thin. But at the end of the day, if you find a mechanism that you're paying off the debt, but then having a little bit extra left over, I say do it. I'm not the type where I'm afraid of debt. All right, now let's look at my profit hit and runs for the month of November. Early on, I sold out of this ulty position because I just didn't believe in ulty, made $20, so I didn't want to lose money. But throughout the month of November, I made a couple of quick hit and runs where I made like $300, $55, $43, $70, $200. My biggest win of the month was my calls on my NVIDIA shares. So since I have about 6,000 shares, I was able to do 60 calls against my shares on NVIDIA. So one call is 100 shares. So I basically had 60 calls at 50 cents. So 50 cents is like $50. So that's how I was able to make $3,000. And if they expire on December 20th worthless and they didn't execute, then I made $3,000. But if they execute, then I made that appreciation and this premium. So it's definitely something I'm going to be incorporating into my strategies. If I have 100 shares of one particular ETF or stock, I'm definitely going to be looking to running a call on it so I can maximize my gain on it. Right. But in the past week, I definitely had two, I would like to say F-ups, but I want to be polite on this channel. But for SPY, I ran a SPY where I was intending to do a call, right? But I actually ended up buying a put. So I basically made an $18 dumb error. But then for MSTY, I was definitely kind of bullish on MSTY. I bought in at about $38 a share. And then MSTR itself dropped to about, I think below like the 350s. And then now it's trading back up to the 400s level. But for me, I don't know. Bitcoin's one of those things. And MSTY and MSTR invest heavily into Bitcoin. Is just so fluctuating that I don't know. I might not do this again. So I might just stick to my known technology stocks and known SPY calls. But then for xdte, when I bought it at $52.32, sold it at about $53.13, bagged about $264. So anytime I get like a gain like that, I can lock in. I'm probably going to take it. because ask somebody on the side of the street to give you $260, right? It's not super sexy. It's not $2,600. It's not $26,000. But end of the day, this $260 is going to add up over time, right? So all those small little jabs, right? Maybe one big jab ended up making an extra $3,382.81 in the month of November. So yeah, grand total for the month, $8,359. Here's just, oh wait, let me move my face out of the way. But here's kind of a chart to track the profit hit and run. So initially it was only like $600, right? But now it kind of bumped up to 870, 600. And then once I realized, hey, I could probably be running option calls against my NVIDIA shares. Yeah, that we kind of blew this out of the water and skyrocketed. Because without that, you know, without the mess up for SPY, the msty, this would be kind of relatively on par, making an extra like, you know, $600 to $800. But those two mess ups definitely brought down my average. But that $3,000 call was massive this month. Definitely something I plan on incorporating in the future. And if you aren't doing it, it might be something to look into now, right? Who doesn't like more money? Okay, so next thing I wanted to talk about is my xdte distribution for last week. I currently have about $3,600 invested, so this is what a $3,600 portfolio of owning xdte looks like. Not super sexy, but it's $12.65, right? So I definitely missed that huge spike of, you know, $101, but, you know, over time, this $12.65 is going to go up. Don't really need to talk about the individual performance. xdte is a weekly payer, so it's always going to be more money. And then for JPQ, it's a once a month. So I should be getting my distribution this first week of December. So I'll let you guys know how that goes. All right, guys, last thing I want to call out before I wrap up this video is my brother has a YouTube channel as well. He's actually my twin brother, but his investing ideology is a little bit different than mine. I took on a bunch of debt to kind of increase the velocity of me potentially retiring quicker or just having financial independence that money offers, right? So he actually was able to invest and over time make about $231,000 in his investing portfolio, just like his normal brokerage. And then he runs calls, does options. So he has like a different perspective of money than I do. So he saved up the money. He did the calls. His account was now $231,000. Mine, I borrowed a bunch of money. Mine jumped up pretty fast. And then I'm just trying to run some strategies using other people's money to make you more money. But yeah, that's kind of just a different investing ideologies and philosophy. But yeah, so let's go to this. Hopefully I didn't bore you guys to death, but this was the November update for my specific project Premium Harvest. Yep, we definitely had some net gain over the last month, you know, $5,000 in gains as Robinhood is showing right now. We talked about a bunch of good stuff. I talked about what I plan on doing with my NVIDIA. Definitely debatable on what the right move is here, but I'm going to be thinking about it, what makes sense, what doesn't. If NVIDIA is on an upward trend, that's going to be fantastic, right? And, you know, if it goes higher than that, my cost basis of, you know, $25.35, if it goes higher, I'm definitely probably going to keep it. But if it goes lower than that cost basis, and if maybe on the declaration date or before the ex-dividend date, if it goes anywhere sub 25, oof, that's going to be a hard decision I'm going to need to make. And I'm probably going to sell out because I truly believe that these are for YieldMax momentum plays only. The Kurv funds that I think are doing a lot better job than YieldMax, and I'm very close to investing in these funds, and it might not be surprising if I invest in them in the next week or some sort of market downturn. But yeah, guys, that pretty much wraps up the video. Hope you enjoyed it. Hope some different ideas came to your mind about one, investing in a Kurv, just YieldMax ideology in general. Yeah, hope you guys enjoyed the video. Hope to see some likes, comments, some more subscriptions. But yeah, guys, enjoy your journey. Hope you guys have fun out there. Good luck on your journeys. Love you.